You're listening to the Productive Therapist Podcast, the world's greatest and most brilliant resource for busy therapists who'd rather be laying on a beach in Hawaii. Each episode is packed with simple tips and inspiring insights from the Productive Therapist team to help you grow your practice and have fun doing it. So without further ado, let's help you get more done and have more fun.
Hello. Welcome back to the Productive Therapist Podcast. Thanks again for listening. Today, I had a fun conversation with Carla Titus. She's the CEO of Wealth and Worth Within, a fractional CFO firm who provides financial consulting and advisory services to business owners, specializing in therapists as well as other industries. She's a finance expert with over 17 years of combined corporate financial experience as well as business consulting experience. She's built a team of financial experts who all have at least 10 years of experience in their respective fields. Their priorities for their clients range from growing profits, increasing cash reserves, to paying the owner well so they can build personal wealth. We had a fun conversation, I think it was fun at least, about mastering margins and talking about a strategic guide to achieving better margins in your practice. I hope you enjoy this podcast episode. Hello, Carla. Welcome to the podcast.
Thank you for having me here today.
Yeah. Like I was telling you before we hit record, I actually love talking about money and you feel the same. So this is going to be a good time.
It's a great match.
My first question for you is, I would love to hear the story or the meaning behind the name of your business, which is Wealth and Worth Within. I'm sure there's something interesting there. Yes.
Mhm. Yeah, it's actually a gift from one of my amazing clients that took a chance on us early on in our journey of growing this company. And it was really interesting because in helping her kind of figure out her financial, matters, I realized that what we were trying to accomplish was twofold. One was to build personal wealth for the owner of this business. They needed to take time off. They needed to finance it through the business profits. We needed to make profits happen in order for them to take the necessary time off. And the worth of the business, what the business is valued at, it's multiples of profit. So we wanted to drive that growth and make sure that it's worth something one day when they go sell it. And I realized it was all within them to do it, but they needed a guide. They needed support. They needed direction. They needed someone who understood them, where they were trying to achieve and how to get there, and really just map it out for them. But this is within their abilities. It's just that they were so shy or afraid to maybe look into the numbers or even understand what that meant. And then once we got into it and empowered this owner to take control of it and educated them in the gap, of knowledge there, they were just rocking it. They were able to finance 4 months off. They were going through some treatment, and that would not have been possible if we weren't working with them to generate those type of results and give them the clarity they were looking for. And their gift to me was the business name that I came up with.
That's so beautiful. I love that. And did they actually suggest that complete name, or did they give you the idea or the seed of it? What was it?
Great question. They gave me the idea. I kind of thought, we do money around here, so it's got to be something related to that. And I love alliteration, so I was like, okay, it will be three W's, I guess. And I went back and forth, through so many names, and this was the one that kind of resonated. But it was that experience of going through that work with that client that really inspired what you see here with us today.
That's fun. It doesn't always happen that the name of the business actually is packed with meaning and like the values are in the name. But I think that's cool when it does happen. And yeah, the alliteration is wonderful, to use another W word.
Just don't say it fast 3 times because that's really
That's
hard.
probably challenging. Yeah, I imagine it is. Yeah. So I have a confession to make to you on the podcast today. And that is that for the majority of my business career, I was winging financial decision making and, and all things related to money. Because I started out as a solo private practice,
Right.
never really had it in my mind to start a business. Ended up loving it, of course, but I
Yeah.
didn't know from day one what I was doing. And then, a bunch of years in, I started a group practice, which, as you know, gets just more complicated, and
Hmm.
there's more money and more decisions and more things to do. And then, finally I read Profit First and got some guidance and got some business coaching and all those kinds of things. But my question for you is, how frequent is it that a small business owner, let's say a therapist, is running a business without very much foundational financial knowledge?
much more common than people like to think it is,
Okay.
because everybody thinks they're the one and only that is running a business on gut or intuition and not paying attention to the numbers. This is a lot of business owners, and not just in this industry, but across many different industries that we work with. We see this commonality because you got into business because you are good at what you do. You love what you do and you want to do more of that. And the money maybe wasn't necessarily the reason that you wanted to get into business in the first place, but the money is what will keep you in business and allow you to have the impact you want to have long term, right? So you can create jobs, you can pay yourself, you can have that profit that makes it all worth it at the end of the day, plus the freedom. So it's always, double side there. But most people are winging it. That's the truth. That's the reality. They might not tell
Right.
you that. They tell us that all the time. They come to us and they say, you know what? I just winged the decisions. I have no idea. I wasn't looking at the data. I'm just deciding because it felt good, or like my friend told me that's what they did, or I read on a blog that's what you should do. And this is how business owners sometimes make decisions. And it's not wrong. It serves them. It serves the purpose. Sometimes they actually do well with that,
Hmm.
but they know deep inside that they would like a better system. They would like a better way. They are craving the data insights that are missing. And I hear this often because when we pair up with them the data and pinpoint the issues that we see on the numbers, all of a sudden they're like, that thing that you just said, that is exactly what I've been feeling. Right. But they couldn't put a name to it. They couldn't pinpoint it. And all of a sudden we're
Okay.
like, it's this line right here. This is the stress that you're feeling. And here's why you're stressed. And better now, we know how to solve it because we have identified the problem.
Yeah, that's good. I appreciate that you said that sometimes instinct and like going with your gut can work, but I think you're right that that doesn't work forever. And it's much better to have that maybe paired with obviously some data and some guidance from financial professionals. I think that's fantastic. Yeah. So I feel much stronger now as a business owner, having help from a good bookkeeper, a good CPA, a good financial advisor, having those people on my team, and then an executive sort of coach helps me feel like pretty strong in my decision making, and it makes a huge difference in confidence, in growth, in feeling that wealth and worth within.
Nice commercial there for our services. I appreciate it.
I'm working on my commercial voice. Yes.
It's true. Now, they can help you see some things that maybe you're not even realizing or noticing because they work in this area day in and out. So they're much more used to seeing the numbers and
Right.
navigating that. But I'll tell you, even myself, as a CFO who does this
Hmm.
for professionally for a living, when I look at my numbers, sometimes I need to get some help, right? I consult
Yeah.
other CFO friends of mine that can come in and look at my numbers and say, what am I missing? Like, yes, I am the owner. Yes, I have got an intuition that's helping me guide while I look at the data. But sometimes there's hard decisions to make, and there's things maybe I just didn't pick up on. And when doing this for clients, it's a lot easier, by the way, for me. But when doing it for
Sure.
myself, it's like a bit of a struggle because I'm just too in it, and you can't see, the tree through the forest. Sometimes you need someone to be like over there, like that's what you're looking at, and help you come up with ideas or perspective that you might be missing in your business. And they come at it from, their own experience or expertise or knowledge that they can share with you. So you don't feel like you're alone at this. It's hard enough. It gets complex. The more you grow, the harder it is. So like, let's just get real. You just need help because it's a lot.
There's your commercial. You just need help because it's a lot.
And you need people in your corner, right? To
Yes,
support you.
that's wonderful. So for somebody who's listening and heard you say twice CFO, and they're like, "What is that?" Can
Oh
you
yeah.
just briefly mention what that acronym means and what that person does?
Yeah, I was shocked because my whole life has been in corporate finance. I'm like, what do you mean you don't know what a
Sure.
CFO is? And then I realized, oh no, like this is real. Like people have not been exposed to this finance function of the business, even though that was my daily life before. So CFO, Chief Financial Officer, just like you guys are familiar with CEO, Chief Executive Officer, the other side of the coin is the financial side, and they tend to work in a partnership. as business partners to make decisions. And we do what we call fractional CFO work, which means we are coming in to support your business fully, but at a fraction of the cost because you don't need to hire us full time. You do not have enough scope for full-time CFO yet. One day
Right.
you will, and that is fantastic because that means, we're doing our job right. But for now, smaller businesses only need a fraction of support, but they need all the expertise and experience that comes with having someone who understands finance, has dedicated their life to studying finance and knows what levers to pull, what conversations to have, how to solve issues and provide guidance for how to do finance as well in the business. And that starts from monitoring financial performance to having compensation, structured conversations, to looking at profitability, to looking at what are some new revenue streams we want to create, how are our existing ones functioning, are we creating the right margin and room for profit in the business, and making intentional decisions around everything that touches money, which is essentially everything, by the way. So every decision you make is time or money, and time is money. So if you're not paying attention, you could quickly be making some wrong decisions, not intentionally, just
Mm-hmm.
because you didn't think about the financial impact of what you're about to, make a decision on.
So I would guess that most therapists in private practice, the last person they think about hiring or delegate role to delegate would probably be finance, because like marketing is way sooner, right?
Yes.
Clinical work is way sooner. Maybe even a virtual intake coordinator is sooner. And probably the last thing, or one of the last things, would be the finance role. I don't know, I'm just guessing, but do you think that sounds right?
Yeah, so they will probably start to build their money team with a bookkeeper first, because
Sure.
that is the first easiest, affordable thing they can get off their plate, right? You get that off your plate, now you can focus on growing the business, which is way more valuable use of your time anyways. Just your billable rate alone, like just for you to do a
Yeah.
session is way higher than having a bookkeeper on your team. So that's the first hire. The next one will be an accountant because you got to file your taxes and there's a compliance aspect that you're required to do, and unless you are learning how to do taxes, you're just going to hire someone to do it for you better than you
Yes,
probably
please.
could. And so that will be where you start very much from the beginning. And for, as long as that serves you. And then it gets to a point where you're starting to ask questions and you're like, hey, bookkeeper, can you walk me through what happened last month? Hey, accountant, how do I save money on taxes? What strategies are we implementing? And then those questions might or might not get answered depending on who is giving you support and at what level. And then you start to realize, man, I really would love to have answers to my question on, can I afford to hire the next therapist? Hey, what
Mm-hmm.
does a group practice cost me to scale? And at what point do we need to do XYZ, and start to give you some guidance that's proactive? And that's where you start to seek for this finance function, because finance is forward looking while bookkeeping and accounting is past and present. So making sure that you have the someone with the ability to do the projections and financial forecasting in your business proactively really changes the game, because now you're put in the driver's seat with your hands on the steering wheel. And by the way, your CFO sitting next to you on the co-pilot seat,
Yeah.
telling you you need to slow down, or hey, let's push on the gas, or hey, we're about to run out of gas. Let's stop for some before we do. And that's the function of the CFO and what it serves. You're still in control. You're still driving the car. You're still deciding what direction and where you're going. But now you have someone sitting next to you that's telling you, hey, by the way, watch out. Something's about to happen. While your accountant's on the back seat looking back or sitting in the present being like, hey, we should put more money aside for your retirement to save on taxes, or some other strategies that they can implement based on your personal situation.
Such a good analogy. The CEO in the driver's seat, the CFO in the passenger seat, and the accountant maybe in the back whispering in your ear.
Yeah. Don't forget the tax estimated payments
Right.
are due,
Tax liabilities. Yeah.
And we've already budgeted for that. So then, we're ready to go. And there's times where we will maybe recommend we take the wheel. I'm
Mm-hmm.
like,
Sure.
we're about to take a short term. We need to just do it.
Yeah.
But at the end of the day, it's the owner's decision.
I have so many more questions about that, but I want to get to talking about gross margins. So can we jump into that?
Absolutely.
Fantastic. So tell me about gross margins. What are they and why are they important?
Yeah. So gross margins is a calculation we use to be able to manage business, that we that allows us to hit a certain profitability. And it starts there because by the time you get to profit, it's too late. You've already spent all the money and maybe there's nothing left. So you need to start at the top in order to manage what's going to happen at the bottom of your profit and loss statement. So you have your revenue line, which is like how you generate money for the services that you provide. And then you have the cost of delivering those services, which is going to be your team, your therapists, your clinicians, anyone that's doing testing, assessment, any of those costs, even materials for those type of services to be able to be performed and deliver are going to be your cost of services. Now, this is the equivalent of cost of goods sold in a product-based business where materials to create that widget need to be purchased in order to create that. Same thing here. Without those therapists and clinical wages and costs, you could not collect that revenue, right? Because they're integral part of delivering the service. So you want to account for that particular type of wages differently than you do your administrative team or your leadership team or yourself even, because if you're not in clinical work, then you're probably not revenue generating at this point, but your team is. Once you understand what is your cost for those clinical staff with compensation and such, you want to do the calculation where you take revenue minus your cost of services, which is your clinical staff wages. And then you take that outcome and divide it by revenue, and that'll give you a percentage. That percentage is where we get to see how well is your team performing at a percentage basis. And you can do this by clinician, by the way, to understand, are they costing me money? Are they break even? Or
Mm-hmm.
am I actually producing enough money from them to be able to cover overhead expenses, which is everything operating, administrative, leadership, rent, anything that is required to run the business outside marketing costs. And then that leaves you room for those costs to be covered. And then ultimately have some profit left. And where I see this not worked out well is where the margins are so slim, where maybe you have this commission split percentage where they're not accounting for all the cost of employees, including payroll taxes, benefits, additional cost of a laptop, whatever else that you're going to spend money on to set up your employee for success, CEU credit reimbursements. And they're not doing the math on all of this. And then before they know it, there's nothing left. And then there's no profit. And they're like, why is this not making me money?
I've heard those stories. The therapist who started and grew a group practice and then finds that they're making less money than they did when they were solo and they don't know why things are not working. And then you kind of take a look under the hood and you realize they have too many expenses and they're paying people too much. That
Mm-hmm.
seems like such a common mistake. And I think it has something to do with the fact that we are helping professionals. And so we want to do the most we can for our therapists. And so we slip into that. Um, Habit of giving too much and then not paying attention to the margins and the net profit and like actually what the business can afford. I'm sure you've seen that quite a bit too.
Absolutely. You guys are the most generous group I have of business owners. And we absolutely want to encourage being generous, by the way. We are
Sure.
definitely about people and profit, not one over the other.
Right.
But the business has to exist long term. And in order to do that, you have to have profit. And
Hmm.
there's ways to reward your team, and there's ways to structure compensation to incentivize performance as well. And we've done that successfully through profit sharing and other programs that we're able to
Yeah.
install in place in lieu of maybe not compensating us high because sometimes we just can't afford to do it. And we're, obviously market research against what the area pays for competitive pay. We're not, trying to come in way under where we're just asking people to do the same for half. That's definitely not the style. It's normally like, can you do half for full salary? And we're like, well,
Right.
that math doesn't quite work. And we have to be mindful of that. But also, what are the other benefits we're providing the team? Flexibility, maybe remote work, some other things that they value time off. I see that is very generous policies, by the way, way more generous than
Hmm.
corporate. And I'm like, oh, I wish I
Interesting.
had that at my corporate time. But, there's a reason why they don't pay that much time off in corporate. And just seeing that generosity come through, we just have to manage it better. That's all we're
Sure.
saying, right? We can still afford to be generous if we are profitable because there's still other things we can do for our team to support them on that journey and help them. But it doesn't happen by accident. And when you overpay and you can't make payroll and you're running out of cash, that doesn't help anyone because now you cannot create jobs for the long term anymore.
Absolutely. I remember telling my team early on, just being honest about it, and I said, the more we grow and the more profitable we are, the more benefits that I can afford to add, and the more, you know, the better this place gets, the better this job gets. But it's got to come from that because you can't pour out of an empty container.
No, and definitely not at the expense of the owner, which I see oftentimes is the case,
Sure.
right? Like the owner sacrificing themselves. And we're like, you might as well just go back to doing this yourself and being the
Yeah.
clinician because then you at least make a paycheck. And that's not the point, right? This should be like worth it for everyone
Yes.
and make sure that everybody has their fair share and, make sure that it works for the practice, long term. But yeah, this is a very generous group, which we do not want to take away from, but we want to manage it better and make sure that the business can exist long term by having the reinvestment of profit necessary to scale. Because scaling is expensive. People don't talk about this. Growing year over year takes money. Sometimes you're spending more on marketing, sometimes you're spending more on training your team to make them better clinicians. And these are the
Office
investments that will
space.
pay off
Mm-hmm.
office space
Mm-hmm.
and sometimes we get a little, extra on that office space ahead of time. And so we have to better manage it and plan for it better.
I have a question. Is gross margin the same thing as net profit, or are those different?
Yeah, good question. So net profit is going to be your bottom line, what we call
Right.
profit or loss.
Mm-hmm.
Net income is what you'll see as the name on the profit and loss statement, right? So same thing, same terms, net profit, net income, loss or profit, same thing. It's the bottom number after you've paid everything and everyone. Then you'll get this profit amount, and that's what taxes get paid
Right.
on that amount, right? That you generate of profit. That's what else you're going to get taxed on. And depending on your entity, that differs based on your situation, personal situation. But yeah, that's what you see as the net profit. And what we're talking about is a little bit above, like right below revenue, essentially, or net income, which you see at the top. And that is after your costs of goods sold are paid, which is your clinical staff. Then you see something called gross profit. And that's why it gets confusing because all this terminology feels like it's all the same. You're like, wait,
Yeah.
gross, net, what? And so we will do the math at the top level before your operating expenses are paid. Then you'll have another percentage that's net profit percentage after you've paid your
Okay.
operating expenses. So hopefully that helps navigate the outliners.
Just to be 100% clear, if we charge $150 for a counseling session and then paid the clinician, just for easy math here, let's say pay the clinician $75 or 50%, does that mean the gross margin then is $75 roughly?
Correct. And then
Okay.
we do that as a percentage. So then you divide 75 by 150 to get that percentage amount.
Okay.
Correct.
Okay. That's helpful. Thank you for clarifying that.
Yeah. And that's before you cover. Now, remember, now with that 75 left, you still got all the operating expenses to cover, right?
Yeah.
Rent and marketing and such. And then you see how quickly it goes and why sometimes people are not profitable because they don't have the right structure in place.
I think that's a mistake that I made quite a bit for a number of years because I would do what I thought was pretty simple math and figure these things out, roughly. But then I
Hmm.
wasn't calculating in all the employment taxes, or I wasn't calculating in all the extra things that really should be factored in there. And so I was like, why does my math not seem to come out right? Or why are the results not, what my math showed?
Yeah, and
So,
depending on the state, your state taxes might be higher than average. So you have to account
right,
for that too. So
right.
there's a lot of things that go into those calculations, but keeping the math simple is important. And I think we all need to be able to understand it
Hmm.
and manage it. And at the same time, building, good financial metrics in place to understand what's happening with the business is going to really help clarify a lot of those questions. I mean, not to say that there's complexities around compensation, period,
Hmm.
and then there's complexities around if you're looking at insurance, side of things. It gets even more complicated. So
Definitely.
this is why gross margins are such a great way to manage because you can measure and benchmark against other sides of companies because that is universal. Percentage comparison is going to be universal too, regardless of the size, regardless of the type, location, you could still compare that. Same with net profit percentage.
That's helpful. Yeah. So I think it'd be great to talk about compensation structures. And I noticed that with productive therapists, it's very simple because everyone is hourly, the same dollar amount for for every hour.
Magical.
It's so simple. And then for a group practice, it's quite a bit different because we have different pay rates, we have different reimbursement rates, and then we have maybe like an admin rate that's lower than the clinical rate, et cetera, et cetera. But can you talk about compensation structures, what you've seen work?
Well, I think it's unique to every practice. And I think some
Sure.
work really well for some practices and some don't apply very well to others. And I'll speak and tie this to accountability because I think this is where all the profits go to hide, and where we feel we
Hmm.
cannot ask our team to deliver to the performance and expectations of what we're compensating them for. But I'm here to tell you that any job would not tolerate what you guys let your team get away with sometimes
Sure.
on like how little billable sessions get done and no
Hmm.
consequences. Like that is a problem. And there's ways to address it. We're not saying like go fire everybody. Like that is not the style, right? It's a let's have awareness, like have a conversation, let's do some coaching and then help them land to the same conclusion of this is what you're getting compensated for and the expectation of what you're getting compensated for. If that hasn't been the case, that's going to be much harder if your culture is not that way already. And this is what we see the difference with different practices. So I'll start with commission split. That's definitely my least favorite because there's just not a ton of flexibility. When people ask for a raise, if insurance is dropping the rate, they're just going to get less pay. And nobody wants to work for less. So let's just be honest. So then you have to do something different and your percentage goes up and all of a sudden you're eating into your gross margins and there's just no more room. Like at some point you just run out of room to be able to give people more.
Hmm.
Ideally, if everything worked according to plan and insurance rates were going up, then you could afford as the rate go up to give your team that increase. And that's fine. And I've seen it work well with practices who are doing commission split that have that under control, right? Which again, we don't dictate what that is. So it depends on your state and insurance and who you're panel with and such. Um, so that's one method that has been implemented well and worked well for some practices, but I don't see that as the common place where people are at on compensation
Okay.
structure.
Interesting.
So when then people come to me and say, I'm on commission split and it's not working,
Hmm.
then we start to explore other paths. The path that we tend to go to is hourly. It's very easy to calculate. We know what our costs are going to be per session. We can manage the margins based on that. We calculate based on number of clinical sessions per week times 48 weeks, which is the common, amount of weeks that we work in a year. Give or take, some practices maybe are 50 weeks. And then we know what our revenue expectations are, assuming the team is hitting their goals every week, which is a whole nother I think, podcast episode. But this is where, the math makes sense. We know our margins are, the team is delivering, things are good. Then you go to, oh, by the way, I'll speak to commission split too. One more thing is like when insurances stop paying, nobody gets a paycheck. And then people are like, I'm out of here. Like, forget it.
Hmm.
Like, I
Hmm.
can't wait for money 3 months later just because, insurance got behind or a cyber attack happened or, whatever disrupted the flow of payments, or rejected claims and we got behind the bill or quit, whatever it was. Um, and then on the other spectrum, you have salary. And we definitely recommend salary for leadership team. Like the last thing I want the leadership teams to be
Sure.
counting hours. Like
Hmm.
I need them managing, directing the show, helping the owner, like taking on the workload. And they're good at that because by then they've proven their performance. So you're not worried about managing them. They're probably managing you more than the other way around,
Hope so.
which is
Yeah.
great. And I have also seen salary done well for clinicians where
Yeah.
the practice has very clear, high expectations on accountability, and the
Hmm.
team knows they have to deliver and consistently continue to deliver on their performance expectations. And they have very clear guidance what happens when they don't, because there's consequences. And those can vary depending on, the practice, but salary can work and it can streamline your payroll admin time drastically, but you need to be enforcing accountability, which is a hard conversation and not a lot of owners want to be having with their team or the clinical directors having with their team. And so that's where it all breaks because then you're paying a salary and then the performance is not there and you're just losing money actually on every billable hour clinician because they're just not performing to what it needs to be. So that is the spectrum of what we've seen. And then, variables to that is the profit sharing piece, if you wanted to add that, where we tie performance of the company to rewarding the team based on that. So now they're much more aware when we don't make a profit, they're not getting a check. So all of a sudden they're paying attention. They're like, well, why we didn't get a check that quarter or that month or whatever. And we say, well, last month or last quarter, everybody took time off and they were all sick and everybody canceled 15% for all the clinical sessions. And they're like, oh, now they understand the impact of business profitability to their payouts. So now they're way more in tune and want to do better going forward because they're like, I really like my quarterly profit check.
Who wouldn't like that? Yeah. That's so interesting. So there's definitely some flexibility and or room for creativity for with compensation. At the end of the day, the numbers have to add up and hopefully lead you to the net profit or the gross margins that you're aiming for. But all three slash four of those compensation structures can definitely work. I love your quote, and I'm going to write this down and post it on social media. Accountability is where the profits go to hide. Do you say that often? That's good.
All the time because I
Yeah.
literally show the math to my clients and I say, here is where we're at when your team hits 80% of their sessions. And here's the math and gross margins when the team hits 100% of their goals. And guess
Mm-hmm.
what? The way we drive that is availability because it's something we
Mm-hmm.
can control. And then assuming the practice is investing enough in marketing, the lead should be not an issue to fulfill the availability, share. But sometimes what happens is there is no availability, there's no accountability, and then there is no leads coming in. So that's the worst, situation to be in because now you got the
Right.
trifecta of like, this is just not going to work out. So you got to fix one at a time and then ultimately get to a point where all three are working in harmony. Leads are being generated, intake team is converting, we're retaining, and clinicians are at full capacity or aiming to exceed, honestly. They should be aiming to exceed their goal because every week there's going to be things that come up. People cancel, people get sick, things happen. And that availability option is going to be key in order for them to be able to meet their goals and having that intake team, step in and fill in the holes. It's what's going to make it happen.
Yeah, I 100% built my practice on a handful of clinicians who were very eager, wanted to work, very consistent, had availability, took on as many clients as they needed to, and and it's been a dream with those folks, you know.
Yeah.
But there's so many factors, when you're building a group practice, there's so many factors in terms of, like you said, the marketing and the flow of new clients coming in, and then the availability and all the different things. Seems like there's a lot of moving parts. Certainly doesn't operate like a factory or something like that.
Not at
It's a much
all.
different than that.
Just when you
Yeah,
think you cracked the code and that year went well, like all of a sudden the new year is like this happened and that person was out and then this, it's just always
right.
something. And the bigger you are, the more, you'll have of that. And I think it's just the size of business. And every business deals with a form of that. In your case, it's just you have people. So like, things will are just deemed to happen.
Yeah, I've had group practice for 10 years now, and from day one, I've always done commission percentage and then an admin rate. And for me, it's always worked. I've certainly thought about doing other things and, changing the structure to be even more compliant with California employment law. I did actually get a payroll tax audit a number of years ago,
Oof,
which, whew, that was quite an experience.
I bet.
Yeah, and they look back 3 years and
Hmm.
they're primarily looking to see if we were misclassifying our employees. And they also were really interested to see if timesheets matched up to payroll and everything was done appropriately.
Hmm.
Fortunately, we passed with flying colors, but it was stressful. Like, look,
Nicely done.
if you
Yeah,
get audited by the IRS or by your state board or by the payroll tax authority, like you want to pass those tests. And
absolutely.
obviously having all these things in order in different areas of your business helps you to feel successful on those. Hopefully they never come, those days.
Yeah. And record
Yeah,
keeping is key, right? In those situations, like make sure you've done
it
everything
is.
according.
It
And
is.
like I always tell people, it's like you can get audited. It's okay. Sometimes they're just asking the question and checking the boxes, and you might just be fine, like in your case, or they might tell you you're off in some places, and then you'll deal with penalties or whatever that they'll assess to you. But they're not mean people. Like they're just doing their job. They're making sure that everything is in order and that you're obeying by employment law.
Definitely. Yeah, they're looking for people who are grossly breaking the law.
You
And,
got it.
yeah, and that's probably not going to be most therapists because we tend to be rule followers, when it comes to all things, rules and HIPAA and all that kind of stuff.
Yeah, I'm not shocked by the code of ethics that you guys follow. So yeah, for sure I can see that aligns
Definitely.
up.
This is all such fascinating information. I would love for you to talk just a little bit about what what a fractional CFO does and how that can benefit a practice. I don't think a lot of small business owners and group practice owners know that that's even an option.
Yeah, that's true. It is something newer because in the past, you've only been able to access full-time full cost CFOs
Sure.
in bigger businesses, right? $50 million plus. And this wasn't a popular offering before. But what has happened is, CFOs realize there is a market for small businesses. Small businesses need guidance too. And they're craving advisory and support to guide their businesses forward. And the function, like I had mentioned before, of the CFO is that co-pilot, but also like proactively looking forward. So we're already searching the map ahead and be like, "Ooh, 3 blocks from now, we're about to encounter a detour. We need to do something about this. Before we get there, what's our plan? We're going to turn left. Okay, great." And we are already actively seeking opportunities and risk and assessing that for the client, but also partnering with the client to say, are we doing this the best way we can? Like, how we consider adding services. Hey, I heard you say you do an add-on code for this. Are you doing it for everybody? Oh, upon intake, are we asking this question? By the way, we just reset deductibles. Are we collecting upfront a portion of that just because we know they're going to be owing that so we don't have a huge AR on the back end later? Like, these are the type of things that a CFO is helping you think about, navigate again proactively, and taking that driver, like the passenger seat, to drive the financial function of the business. Now, that scope of work is managed by the CFO. So we're doing the financial analysis. We're pulling the simple practice data, or the
Hmm.
therapy notes data, to look and see what payers are paying us, what's the reimbursement rate, is that consistent, did it drop this month, what happened, why, and really getting the nuggets of wisdom and insight that are the business owners too busy to get themselves, because they're running the whole practice to be able to help them navigate to what to do next. Maybe it's like the conversation that we don't want to be credential and panel without insurance anymore, and we need to drop it. What is the impact if we do that before we do it? Because the thing is, CFOs are asking those questions and we're working through those scenarios before we make decisions, which is what makes the function of a CFO valuable, before you just go do the decision and deal with the consequences, which is what a lot of winging it and running it on your own and
Hmm.
kind of your gut feeling is what you're doing. And you're like, well, I don't know what's going to happen. We're just going to do this and then see what happens, right? We're saying, no, 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 hold on. Let me just run those numbers and make sure we're good. And then I tell you, hey, by the way, you realize that's 20% of your business you're about to just give away. And you're like, wait, what? You had no idea because you don't know. Maybe you weren't getting those insights. And so we do that evaluation, then we decide, is that the best course of action going forward? And then if so, what's the next insurance we'll panel with to make sure we can cover that? By the way, are we ready from a cash flow perspective to make sure we can handle this change? And so we start to kind of weave the story together and deal with it before it happens so we can have time to prepare. We can make those decisions intentionally instead, again, just deal with the consequences, which is chaos sometimes, and a lot of risk taking, by the way, from the business owner to just like go, figure it out on their own, and really being that business partner and perspective to say, hey, this is not the best way to go about it. Maybe we should consider this 3 other ways we could do this. Have you thought about part-time? Have you thought about contracted positions for that function before we need a full-time? Like, these are the kind of things we're helping business owners navigate through, and also answer the question, like, can you afford it? Like, that's like the one that we get the most, right? Can I afford to do XYZ? Am I ready to sell my practice? Can I, buy this thing? And we can answer that in the financial plan. Also, monitor performance and financially see how we're doing every month. Because guess what? Are you looking at your numbers every month? Hopefully you are. But if you're not, we're doing that for you and with you, and holding you accountable to have those conversations every month to ensure that you are performing financially well. And if you're not, we're also going to help you create a plan to get back on track.
That's huge. Yeah. That function of looking forward and helping with a strategic plan and making informed decisions and really like setting the business up for success. Like, yeah, when you talk about it the way you just did, like I think there's no business that should be without that function, right? That person that does that thing. It's like your financial chat GPT, but in a human that's much more nuanced and probably better at it.
That understands your situation, because ChatGPT is
Yes.
generic. But yeah, all the things. And the other thing I always tell my clients is we're here to create value. We will help you grow top line revenue, and we will help you grow profit, or at least maintain it if it's been going down over time, because our value is to create value. Of working with us. The investment you make in us should not only pay for itself, but then give you something extra in return. And that is the job of a CFO, by the way, why we get paid such good money full time in corporate type settings.
Sure.
It's because you are in charge of the financial future of the company, to increase profit and increase revenue over time, and manage costs and find opportunities to increase all those areas. At some point, we want to also optimize for what's ideal and make sure we're consistently performing at that level as well.
Yeah, definitely. That's fantastic. So, two questions before we wrap up. The first one is, what books or resources do you find yourself often recommending? And it's totally fine if you want to plug your own, but what do you point people to when they're like, oh, I need to learn more about this. Or I want to use your services, or I want to use your services in the future. Yeah, what do you point them to?
Well, definitely my newsletter, because we give a lot of juicy insight into what we're seeing business owners do.
Fantastic.
We write a lot around, and obviously our podcast episodes too have been very educational in nature on purpose, because we're trying to cover that gap, of knowledge. I know you're all familiar with Profit First. I have a, kind of first introduction to Profit First that totally resonates, like the whole aspect of profit. Of course, that's why we're in business for, and we can't have impact if we don't have profit. So we need to do that, right? But then it doesn't go beyond just managing cash flow essentially for the business. So that's why we say, okay, now time to graduate from Profit First. But if that's where you're starting, fantastic. And if that's working for you, great. That is a great way to get introduced to financial management. But it's just know it's like level one out of 10. So if you want to move on past level one, then you want to identify other resources. Simple Numbers, Straight Talk. It's another book that is very friendly in how it speaks about finance. It covers some of the topics we covered today here with gross margins. And this is, by the way, how all businesses manage financial performance. This is not unique to therapists. Now, we've created a framework unique to therapists because we understand the world and the industry, but this is applicable financial management terminology and metrics that every CFO out there, measures for their business, and something that you can reference. Um, Outside of that, just doing your own reading and understanding of what's happening in your business, like who are you asking advice from too, is very important. You're looking for people who have the experience, the background, the credentials, that have done the thing, they know what they're talking about, and not just falling for anyone who says they're a CFO, which is a thing now.
Yeah,
And it's
interesting.
unfortunate. So really understanding, and asking like, what is the background, the expertise, the knowledge that comes with, who you're taking advice from, is really important, I think, as well. And we definitely put a lot of educational content on purpose because we want people to have access. We are not gatekeeping that. And then if ultimately they're like, I just don't have time, then they can outsource it to us and we can help them with that.
That's great. Some of the best advice that I ever heard when looking for help from professionals is to find a person or a company that has the heart of a teacher and will help you understand the concepts, whether it's money related or tax related or something else. And I can tell from getting to know you and talking to you that you absolutely do enjoy educating people and helping them like really wrap their minds around the concepts so that they can be successful. And I appreciate that. Thank you for that.
Yeah, we love educating. Again, we're here to empower business owners, not make them feel like they should have known this, or like, it's like saying like I should have been a therapist just because I wanted to. It's like, no, you have to get education and then go through the experience. Like just because I wanted to doesn't mean I'm gonna just make it happen, right? But really helping them just get enough information and now they feel comfortable and confident in their business finances. And then they can have better conversations with us because now they're, up leveling their own baseline of knowledge. And I know you all like to study and learn new things. So like this works really great. And we love to teach. So it works, that's a great combination.
Yeah, for sure, for sure. And so for people who want to get on your newsletter list and take advantage of some of that educational content, where can they find it?
They can find it on our website at wealthworthwithin.com. And there should be a prompt to sign up for our newsletter right when you get to our main page. And yeah, follow along. We put out content twice a month with just like very relevant what's happening with seeing trends and what's happening with our clients, in a general way, addressing kind of what we're seeing in the industry and things that you should be aware of, and just some knowledge nuggets for you to hopefully take action and start implementing some of it. Because I know we read a lot of things, but if we're not putting into action what we're learning, what's the point? You're going to probably forget it and move on to the next thing.
Yeah, that's so important. Awesome. Everybody listening, go to wealthworthwithin.com and sign up for the newsletter and take advantage of the awesome content, and then reach out for services if that's what you need. Thanks, Carla, for being on the podcast. This was fun.
Yeah, thanks so much for having me. I had a great time talking about all this money topics that hopefully people are getting much more knowledgeable with too.
Yes.
That's it for today. Thanks so much for joining us. If you enjoyed this episode, please leave us a review and hit the subscribe button to make sure you never miss an episode. If you're looking for more personalized help, you can reach us through productivetherapist.com. Thanks so much for listening. We are Productive Therapist, and this is the podcast that helps therapists get more done and have more fun.